Trading psychology. With the recent news in Bitcoin lately, there's fear. People call it FUD, but I don't really like that term. Uncertainty and doubt is something you should never have as a smart trader. You have to embrace the chaos. You wake up expecting risk. This idea that you're only going to take on risk when you're certain couldn't be farther from the truth. Let's just get this clear. You will never be certain. The day you feel certain is going to be one of your biggest losing trading days. Speaking from experience, psychology is critical in trading and investing when you're taking on risk. What ends up happening is that money creates a lot of emotion for us as humans, and the fear of losing money plays right into it, plays right into those emotions. If you're not aware and careful, those emotions can drive your trading and investing decisions. As traders, we need to try to remove that from the equation as much as we possibly can. I can tell you from experience, the feeling when you have a lot of risk on and that fear that is associated with losing money can be absolutely paralyzing. I'm sure many of you felt the same way at some point from your trading and investing. And it's no different when you're trading Bitcoin. I see a lot of emotion come out when we get to big points in the market, which is totally natural. But as a trader, you always want to work on yourself, and you're always trying to get better. That's what I love about trading, because it's a lifelong process on getting better and more disciplined. There are so many things about yourself that you can work on to help you be a bigger trader, a better trader. The easier thing to do when you're trading is take the you out of the equation. This means taking your ego completely out of the equation. It's so much easier to trade out without emotion. One of the ways to do this is removing yourself and then letting a trading process take over. My trading tends to be more mechanical because I've gotten to the point where I consistently ask myself, what does my method say? What's the chart doing? And what's the process here? Over and over and over. By doing this over and over, I don't get emotional about trying to figure out where the market's going. If you often find yourself saying, well, I think Bitcoin's going to double here, or I feel like Bitcoin's going to crash this far, you're just doing way too much thinking. It's your ego that's trying to say those things. When you start building that into your mind and energizing an idea like that with your emotion, you're going to just ignore so much of the other market information that's coming right at you. The ego is going to take over and you will defend a position. You'll just defend it. An idea that you have emotionally charged. I know I'm going to be right here. This has to happen. And when it doesn't happen, the human brain will actually start to defend those ideas. And you'll start to block out any other information that's telling you you're wrong. As a trader, that's where I see so many people blow up accounts. One way to minimize this issue is to constantly be aware and trying to monitor these emotions. Just be aware of them is the first key. But it's easier just to let the ego stuff go. Just get rid of it. You don't know what's going to happen next. You don't need to work on changing yourself. We all have different personalities. Just leave the ego aside. Just leave the ego aside and you can keep the same personality. We can tie this into deciding when to exit a trade, for instance. Your decision can be based on fundamentals, a news story, or something else that happens and changes your mind, leading to you deciding you need to get out. Right? That's usually what happens. It gets to the point where you will talk yourself out of a position. I call that you taking yourself out of the position. The ego's talking there. The ego's taking you out, not the market. Based on news fundamentals, that ego is talking again. I have several strategies for getting out of a position, for instance. There's different trailing stop methods you can use. One of the most powerful is obviously just staying in until the trend breaks. Just trading with the trend. If you want to play something long, we're going to play that 80 to 90% of the time with the current uptrend. Some of you who have not been out of Bitcoin for whatever reason you've created, that's the ego. So now you don't know what to do at the all-time highs because it's already had a good run. You shouldn't be buying right in front of the all-time high resistance, but people do because it's an ego thing. You think it's going to go farther. You think it's going to hit that 50,000. When I'm trading longer term, my mindset is I have a core piece that I'll never sell. For example, back in the 80s, where you bought Apple with the mindset that you would never sell it. You would be glad You would be glad if that was your game plan now, obviously. Some people, after doubles or triples, they say, okay, that's great. I got to get out of everything now. What are the chances it's going to go up again? And then you lose that core position. These markets will tend to go much, much farther than you think. 25,000 is a good price target on Bitcoin, but what if it goes crazy and it hits 40,000 before you know it? Before we have the big first correction or the big bear market. Instead, we need to have something happen in the market. The trend needs to break down completely, or there are some sort of metrics that will take you out of your trade completely, not just deciding to exit because you feel like it, or the ego's talking that you think you want to be right on this. The market gets to decide, or trading process gets to decide, or how you interpret the market in a consistent manner, in a mechanical manner. So in my trading, I don't get out of a position until price breaks trend. For me, I can see that on the daily or weekly charts when I'm talking about the longer term. Simply put, the weekly chart of Bitcoin clearly shows price has been making a series of higher lows, and the direction of the 8-period moving average is still rising. You're not going to get me bearish or completely flat on Bitcoin unless price takes out the higher low pivot, takes out the bands, and goes all the way down. I'll get heavier into my position at certain points. Actually, we recently got more aggressive, and I've taken some profit into the highs, but I'm not going to get out of my entire position until it breaks trend. This is just recent Bitcoin trends I'm talking about, but it'll still stand no matter where price currently is. Techniques need to be learned. Most of it actually comes from experience. I've been there so many times. I've exited a position because I thought the market was going to go up. And I picked some magical point in time on the chart, and I got out of my position. And it just kept going up and going up and going up. And some of those are going to be your biggest winner because no one can believe how far that market went. They'll start shorting it, and then it takes out the shorts and just keeps going and going, but you've lost your position already because you decided when you were going to get out. You didn't let the market take you out. You decided I wanted to get double my entry and then flat instead of letting the trend take you out. A simple thing that you got to start thinking, let the market take you out. You shouldn't be ending the trade. The market, something in your process, the price action changes, and it does something on the chart. That's what gets you out. It's not your decision.